Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today I think that we could take a look at the euro finally. Not just because the euro has some really attractive technical picture, but actually guys, I think that Great British Pound technical analysis right now is more interesting. And to understand this, all this turmoil with around the Brexit, and it gives a lot of different possibilities for trading. And the perspective of this is really significant, especially in the long term. Also on the New Zealand dollar setup, I think that's also maybe even more interesting than every currency. But on the Great British Pound and on the New Zealand dollar, we have talked a lot in our last week and the 2 weeks before. So, and we long time haven't taken a look at the euro currency. So it's approximately more than a month has passed since our last discussion. And I just thought that maybe we could prepare some update here. So in the long-term charts, I mean the weekly and monthly chart, we could say that on the euro currency situation is moderately bearish. So if you would like to know the details, you could visit our forum and read the weekly research. Also, we have put there very interesting analysis from the Phantom Consulting in relation to possible results of the Brexit. So not for the euro, but mostly for the Great British Pound and for the Great Britain itself. But in general, this is also very interesting. It's not really large, some charts there, so it's also very informative and brings some subject that we probably will need to think about. So on the euro currency situation, as I said, moderately bearish, and mostly it suggests some further downward direction. And on the daily chart, guys, here we will talk on very short-term perspective, what we could expect in the coming week, maybe 2 weeks ahead. But on the weekly chart and monthly, this is a bit far-going analysis. So on the daily chart, what we have, market was standing in these upward channels. Very interesting. I will show you. Take a look that previously it stands here in this channel. And if we will clone the line, you'll see this also was some kind of the channel here, the same slope of the lines. So after that, it has broken lower. Now it stands on another side of the channel. And here it's again dropping down. With this dropping, we see an ability for the market to continue move higher. Because if you will take a look at the swings, you will see that they are harmonic. We have talked about it in the weekly research. And following this harmonic swing down, because market by this action was keeping normal retracement equals to the width of this channel, right? Here market should turn to the upside because the harmonic swing down already has been completed. But this hasn't happened, and here we have treated as an inability of the market to continue move higher. As a result, our harmonic swing could be doubled, because when the market breaks the harmonic swing down here and wasn't able to hold with this sequence, it means that the harmonic swing that has been broken could show really doubling to the downside. If this really will happen, market will appear somewhere around previous lows, 105 area. That's the first reason. Another reason why we think that really could happen is because we have this ABCD pattern. Take a look that the CD leg of this pattern is very steep. It's really very fast drop on the Brexit was. And usually when the market forms such sort of the ABCDs, when the CD legs just shows some miserable plunge down, usually leads to further extension to the downside. So here we have 100% extension. It means that the chance that market will follow to the next extension, it's really very significant, very high chance that will happen. and it stands approximately right. So again, around 106, 105.80 probably. So that will be the 1618 extension. But the trickiness of this moment stands around the possible drop further. So because the market will lead and reach 105 area again, that will mean that market will drop below the yearly pivot point. So here, in fact, we have the yearly pivot point. And if really market will drop to the 106, it will tell us that market will come to the previous lows for a second time. And this approaching to the former lows will not make them stronger. That's why we think, guys, that if market will drop to the 105 again, this will be very strong sign that market probably will drop further to the parity probably. We don't know how fast this will happen. Maybe it will be long-term journey, but the approaching again to the 105 lows will tell that probably market will drop further to the parity. It also comes from the analysis of the monthly chart. So if you'll take a look carefully on the monthly chart and the patterns that we have there, you'll understand why this really will be very strong probability that the market will continue to move to the parity. It will drop further to the 105 first. So that's been said, on the daily chart, we could say that probably we should get the downward continuation here. But at the same time, as you can see, this is really very strong area of resistance. So we have the agreement support, not resistance, of course. So 109.25, this major 618 support on the whole move up, and agreement with this EBCD target. So this creates the agreement support. And also, guys, take a look that market is strongly oversold. That prevents market from the further downward drop immediately. So probably it will have to turn some retracement, and only after that it will be able to continue to move down. So if we'll take a look at the hourly chart, usually, as you can see, market shows euro currency we know that likes 50% levels, and so already has shown this retracement. So 50% level has been touched. At the same time, as you can see, market still stands at the oversold. That's why we can't exclude that maybe market will drift slightly higher. This will be 112.30 area. As you can see, also market could form here the butterfly that has the same target. That being said, in the beginning of the next week, we probably will wait for retracement up, and we think that probably somewhere between these levels, the 1150 and 1230, this will be probably it should finish. After that, we expect a possible downward reversal and starting action down to 106 area. So maybe this will be not really fast. Maybe it will not be the plancha as we have here, and definitely it will not be. So probably the action will be a bit slower. But as soon as the oversold condition will be abandoned by the market, it probably will be able to start move down. Because as I said, this overall existing of this pattern is fast action, and the situation that we have on the high time frames mostly gives the hint on the further downward continuation on the euro currency.